a rebound in agriculture and increased access to credit by the private sector are expected to propel the economy to a 5.9% growth this year. In a released projection, Stanbic Bank's Jibran Qureishi says sustained rains over the recent months will support the nation's leading employer. In addition, the resumption of normalcy in key export markets would also drive growth. Qureishi adds that despite being the largest employer, agriculture has somewhat been neglected. The repeal of the interest capping law is also expected to drive growth, with banks previously having shunned individual borrowers and small businesses. Now, Jibran Qureishi, who is the regional economist of Stanbic Bank in East Africa, joins us live in studio for a further look at this. So, Qureishi, you're talking about a projection of economic growth for Kenya to 5.9% this year, and that's up from 5.6% last year. We know agriculture is the biggest driver of Kenya's economy, but then we've seen excessive rains from late last year. It's flooded some regions and some farmlands. We're also seeing a locust invasion, which is seemingly out of control. So what's really the factors behind this growth you're projecting?
So as you rightly mentioned, we are pretty excited about agriculture, but when you look at agriculture, it's a broad sector. So if you pin it down, we think tea production will pick up. Of course, prices could fall, but when we look at demand from key source markets for tea, such as Egypt and Pakistan, we think demand from those economies will improve, so people's pockets there will be much deeper to buy Kenyan tea. But of course, as you rightly mentioned, with rains, you either have too much or you have too little, and with agriculture contributing such a large part of our GDP, you just never know where you stand because nobody can predict the weather. But I think some of the excessive rains that we saw will probably have dampened economic activity in the fourth quarter, not just in Kenya, but I think probably in East Africa. But when we look at this amount of rain, it takes us back to, I think, even 2018 when we had a record year for tea. So I think agriculture will spearhead this recovery. But of course, there's a lot of other factors, such as the repeal of the interest rate capping law, which will hopefully increase circulation of funds, as commercial banks will, in our view, meaningfully increase lending to the private sector. And of course, I think if the government continues to release payments to the private sector as well, which has been a big problem in the last 1.5 years, I'd argue, I think all these three factors could help us revive the private sector to become a dominant driver of growth again.
Okay, so talking about the repeal of that, the interest capping law late last year, has the country started registering some windfall as a result of that?
So it's early days because the repeal came through in November, and I think commercial banks are still trying to assess what base rate they're going to use as a benchmark to lend. As you probably know, the old loans are still contracted at the old formula, which is CBR plus 4%. So new loans will be priced at different rates. But I think in line with the central banking charter, we believe, yes, commercial banks will increase lending over time. And of course, we think this will generally be on a risk-based method. So it's not going to be arbitrary pricing. It's not going to be a finger in the wind estimation of where a certain borrower should borrow at 10, 15, 20. It's going to be data-driven, and I think, as I said, it's going to be risk-based pricing, which is something that I think the sector has to adopt. And name lending should be done away with in the sector. But as we saw with a cap in place for the better part of the last 2.5 years, small and medium enterprises suffered quite a bit, and generally the private sector was suffocating even further. So I think it's a welcome development that the reforms go on. Of course, there's a concern that rates will be exorbitant again, but I don't think that will be the case. I think it's a welcome development to revive growth.
Okay, so the Monetary Policy Committee is expected to be meeting next week. Which way do you think it will go? Cutting further down the rates or maintaining? And whichever way it swings, what will be the factors behind that decision?
So the directional bias for the central bank should be an accommodative one. So we think there could be a 50 to 100 basis points cut in the first half of this year. Probably not at this meeting in our view, that's not our base case, but before the end of June, I think there could be a 50 to 100 basis points cut. The reason we don't expect a move next week at the MPC meeting is I think the committee will probably want to assess how their 50 basis point cut in November has impacted lending, and how that signal has been taken by the wider banking sector. I don't think there's any inflationary concerns on the horizon, but I suspect one document that the Central Bank Monetary Policy Committee will be watching very carefully is the budget policy statement. We've seen a draft budget policy statement released by the Ministry of Finance today. I think the final one should be ready by next month. I suspect if the Central Bank believes that the BPS, the budget policy statement by the National Treasury, will indicate fiscal consolidation, and they'll be committed to that, then I think monetary policy can be accommodative if they believe that fiscal policy is going to be contractionary. But fiscal policy being contractionary is probably going to be the biggest grey area for us this year.
All right. Let's talk about manufacturing. Just curious what the outlook is, because government wants to raise the manufacturing share to 15% by 2023. But of course, we know that Kenya has had frictions with its neighbors, for example, Uganda. So 2023, 15%, is that feasible?
I don't think so. I mean, obviously, it's a very ambitious target, just like a lot of the Big Four agenda that we saw. Deficiencies in the manufacturing sector are way beyond some of the regional border disputes or trade spats that we have with our neighboring countries within the COMESA. I think we continue to see that taxation policies are very arbitrary, very unpredictable. There's a lot of pressure to collect tax, obviously, because of the fiscal position. But unfortunately, we continue to see the industrial sector suffer from some of these arbitrary assessments, which eventually are not good for business and not good for the private sector. But I think over and beyond the fact that manufacturing needs good infrastructure, needs a stable power supply and good distribution. I think the Kenyan government, if it really wants to even achieve 10% GDP contribution for the manufacturing sector by 2022, they ought to think about this taxation policy that's making the business environment quite toxic, very unfriendly for manufacturers. And I think it's getting a bit of a concern, because we're concerned about the fiscal position, and it looks like the government continues to believe that it could increase taxation at the expense of what we believe is now a gradually recovering private sector. But if we continue to adopt this taxation policy, which dare I say is borderline intimidation, it's ultimately going to be very detrimental for the private sector, manufacturing broadly, and the wider economy as well. And
the cost of production hasn't really gone down, just to mention. Well, Jibran, thank you very much for joining us. Jibran Qureishi in studio with us.